Hello guys and girls, and welcome back to my YouTube channel Forex Clubhouse. On this video today, I will share my insights on risk management in trading, as the only aim of this video is to help fellow traders protect their capital, improve their trading skills, and increase their chances of long-term success in the markets. So before getting started, we must know briefly what is risk. On my definition of risk is the possibility of losing money or facing other negative outcomes when trading in the synthetic markets. It's important to remember that all trading involves some degree of risk, and the key to successful trading it is not to avoid risk, but to manage it effectively. So today I'm going to start with explaining how to calculate risk on 5 or 7 of my favorite pairs, and those are Volatility 10-1S index, Volatility 25 index, Volatility 50 index, Volatility 75 index, Volatility 51S index, and lastly Volatility 75-1 index. So we are going to start with Volatility 10 index, and Volatility 10-1 index has a minimum lot size of 0.2. As per the trade on the screen, assuming our entry on the trade was at 8620.40 and our exit point on this trade was at 8625.88. So the proper steps to calculate risk are: first, you will take the entry minus the exit point, and by exit I mean it can be a stop loss or a take profit, whatever the case. So in this case, if we take our entry of 8620.40 minus 8625.88, we will get minus 5.48. Then we will divide our answer by 5. So for this case, it will be negative 5.58 divided by 5. You will get your value to be as 1.096, which upon rounding off, you will get your value to be as negative 1.10. The value comes as negative as you can see the trade ended up in a loss. Coming to our second pair, and that is Volatility 25 index. So first, it is important to note that the minimum lot size of Volatility 25 index is 0.50. Using the trade appearing on the screen right now, we see that our entry was 1824.874 and our exit point here was 1837.836. Noting that down, the following are the steps to calculate risk or reward on Volatility 25 index. The steps to calculate risk on Volatility 25 index are: first, you will take the entry and then minus the exit point. For this case, it will be 1824.874 minus 1837.836. And if you minus using a calculator, you will get negative 12.962. Secondly, you take the answer above, then you divide it by 2. So that will be negative 12.962 divided by 2. And the answer that you will get will be negative 6.481. And that's it. Trading is a serious business, guys and girls. But at the end of the day, it is just a numbers game, and you have to know exactly your numbers, and this, guys, is on a serious note. Now let's get to our third pair, and that is Volatility 50 index, and see how can we calculate a risk when we are on Volatility 50 index. Because on Volatility 50 index, our minimum lot size is 3.00. Whereas on Volatility 25 index, our minimum lot size was 0.50. You see the difference? So as per the trade that is appearing now on the screen, our entry for this trade was at 207.7896 and our exit point on this trade was at 205.86. 0.5397. So steps on calculating risk on V50 index are: you will take the entry and minus the exit points as per the trade above, and this will be 207.7896 minus 205.5397. If you minus that on a calculator, you will get your value to be 2.2499. The second step is you will take the answer above that you have got upon minus the exit and the entry, and you will multiply that answer by 3. If you do that, you will get your value to be 2.2499 times 3, and the answer will be 6.7897. Rounding off that value above, our reward comes to be $6.75, exactly as per the trade on the screen. One may ask, what if I use a lot size of 9.82 and not the minimum lot size of 3.00? If you want to know the answers to those questions, you have to watch this video till the end. Coming to our fourth pair, and that is Volatility 75 index. Our minimum lot size on Volatility 75 index is 0.001. As per the trade on the screen, our entry is at 359739.26. Our exit point is at 356172.79. The steps to calculate risk on Volatility 75 index. First, you must take the entry minus the exit point. So here I will take 359739.26 minus 356172.79, and doing that, our answer becomes to 3566.47. The second step, after the first point, you will take that answer and divide it by 1,000. And if you do that, you will get your answer to be as 3.56674. Rounding that our answer, you will get your reward to be as $3.57. Again, one intellectual guy behind this video may ask, why for once I have never said the word pips when calculating the risk on the above pairs? Well, to provide you answer that question in mind is that the values of synthetic indices are typically expressed in points, which represent the change in value of the underlying assets that make up the index. You get my point? Getting back to our fifth pair, which is Volatility 1x index, we must note it down as our minimum losses for this pair is 0.005.